It is the last market watch of the year, so let's get right into it. Hey everyone, my name is Brendan Klaus, your favorite Seattle area realtor. Today is Thursday, December 18th. We're 1 week away from Christmas, and this is the last market watch of 2025. But let's talk about where the rates are today. So right now, the 30-year fixed is at 6.22%. That's down 0.05% from yesterday, and the 15-year fixed is at 5.74%. So pretty low. 30-year jumbo is at 6.4, 30-year FHA is at 5.86, and VA is at 5.87. As you can see, rates are coming down. They are lower than they were. This is probably close to the lowest they've been since 2022. I just looked back earlier today at when we last saw rates at 6%, and it was in 2022. It's a little bit hard to believe, but that is the last time we actually saw rates this low. And this is certainly nearly the lowest they've been since October of this year. What does that mean? If you're following the news, last week we saw a big Fed cut in the overall rate. Now that doesn't directly impact the mortgage interest rate, but it does play some role. It's correlated. So that rate cut typically is anticipated ahead of time. So when we see the Fed cut the rate, typically what you'll see is that the mortgage interest rate goes lower before that rate cut. There are predictions out that the Fed will cut the rate again in 2026 a couple of times. So we'll be watching that to see actually what happens. But this means for buyers that the rate is coming to a pretty low point. You know, we're never probably going to see the rates that we saw during the pandemic. So getting used to this 6 to 6.2% rate is probably a good thing if you do plan to buy. And it also gives some ability to refinance if you've purchased between the second half of 2022 and now, and your rate was in the 7s or closer to 8 even. It's wild to think that we were in those rates, but now it is a little bit lower. And so it gives buyers a little bit of relief. Not saying that's going to be the end all be all. And rates may come down into the 5s in 2026. We'll see. But for now, it is giving buyers a little bit more ability to purchase with a lower rate. Now for sellers, this is important to think about. I just had a seller actually ask me this week, well, what if the market crashes in 2026? And that's a very real question given what goes on in the headlines right now, but I don't see the market crashing. I think that right now the rates being close to the lowest they've been in the past 3 years is a really good sign for sellers this coming spring market, because it's giving buyers the ability to get used to that rate that is a little bit higher than it was before, but that's kind of been pretty consistent for these past few months. And so they're going to know what they're getting when they come into the spring market at 6.2%, and they'll know what that looks like. And I think that this being lower than that 6.5 or even 6% rate or 7% rate can be helpful to the buyers who are coming into the spring market, just to know what they're getting, to understand that this is the rate that's probably going to be here for all of 2026 and be a little bit more used to that. To say 2025 has been turbulent is probably an understatement. Let's talk about the listings in Seattle specifically. So for condos this week, we saw a decline in the number of new listings, which was very much to be anticipated, down 39 this week to 72 new listings. Pending listings went up 4 to 129, and then sold listings went up 12 to 113. We'll probably see a few more listings close before the end of the year. Pending listings is almost double the number of new listings, which means that basically all of the homes that are listed right now, not all of them, but a lot of them that have been listed for a while are getting taken up by buyers and being put under contract, which is good for those sellers. They can close out the year, hopefully selling their home. There will be some though that trickle over into 2026. So if you're thinking about buying this winter, now could be a really good time to get in there and get a deal, because sellers could be getting desperate during the holidays. And as we get into 2026, they're going to have brand new competition from other sellers who come on the market in January. As far as single family homes and townhomes, this week we saw a reduction in new listings by 37 down to 148. Pending listings were down by 29 at 338, and then sold listings were down by 36 at 293. Again, pending listings almost double, well, more than double that of the new listings. So inventory that's on the market is getting bought up still, and that's probably homes that have been listed for the past 6, maybe more months that have been sitting on the market. So overall, what do you need to know? Right now for buyers, now could be a great time to get in if sellers are feeling desperate, especially in these winter months when we're getting towards the holidays. Sellers are willing to make a deal to close out the year, and so that they don't have to compete with new sellers who are coming on the market in the spring of 2026. If you're thinking about selling, right now is the time that you really need to be keyed into getting your house ready for the market. Really, you need to be getting your home ready to go on the market second, third, fourth week of January so that you can hit those timelines with the new buyers who are going to always start looking right after the new year. We see an influx of buyers every single year who start looking for their home right after the new year. It's their New Year's resolution. Everybody's going back to work. They're thinking about their year, their tax year. So if you are thinking about selling in 2026, now's the time to reach out and let's talk about your strategy and how to get you to the market. That's all for this year. That's a wrap on 2025. So thank you for tuning in, and we will see you again for the Market Watch in 2026.